right, fantastic. Well, Jeff, thank you so much for joining. I always love the opportunity to talk with folks that are leading the industry. You're obviously one of them. For folks that don't know who you are, if you wouldn't mind, share a little bit about who you are and what you do.
Sure. Jeff Higgins, founder and CEO of HCMI, short for Human Capital Management Institute, which is a mouthful. That's why we go with HCMI. Um, I originally started in finance and accounting. Never thought I would end up in HR. Ultimately, growing up to become a VP of finance, controller, and CFO, and used to work closely with HR all the time. And I jokingly tell HR colleagues today that I used to shoot HR down for a living, which is not to say that that was the funnest thing to do, but sadly it was so darn easy because HR couldn't put together any kind of a good business case with numbers. And guess what CFOs and finance people are all about? Numbers. So really, and then in 2001 crossed over
Mhm.
after 15 years in finance, and now for the last 14 years was both a practitioner for about 7 years, and for the last 6 years, 6 to 7 years, have been a consultant, actually helping organizations to do that. So now I joke that I'm a recovering accountant who's paying for my sins of the past, helping HR build a business case with numbers for making really good decisions about people, and hence able to get better resourcing, whether it's software, staffing, training, by making that superior business case that a finance CFO type would approve.
Very good. And so let's go a little bit further. So we talked a little bit. You mentioned HCMI. So talk a little bit more about that organization in terms of breadth, offerings, things along those lines.
Sure. So we started about 6 years ago, and we have a combination. We would argue we're a full service provider. We have training. We provide training around the world in both public and customized workshops for our clients and in different cities around the world. We do consulting engagements, so we get hired by different Global 2000, Fortune 500 type companies to answer difficult questions around analytics, predictive analytics types of things, workforce planning as well. And then we also have some software tools that we offer to clients and customers. So we really offer everything anybody would need, even including outsourced analytics. So if they just want to get analytics done, but they don't have the staff or they only have a one-person shop, we can actually provide support and give them sort of the tools and expertise all in one low price. We're about 40, 50 people, including both US based and an international affiliate. So we have some offshore talent resources as well. And then really what we do is a bit of a summary of my background, which is we bring a very financial orientation to analytics. We don't just come in and use statistics.
Mhm.
We really try to build a model and a business case that ends in a chart, a story that the business would understand and get, which means we speak the language of business, which is dollars and cents. So help kind of translating HR metrics, measurement, story challenges into that language of business so they can see what a problem is costing them or what the opportunity to fix and repair something might be.
Wow. Now, and I'm going to go a little bit off of what we had originally talked about because I didn't realize you did staff augmentation now in terms of the ability to someone to outsource their analytics to you. So, if you don't mind, one of the questions that a lot of HR folks are struggling with is they now either A, have the need for analytics, or all of a sudden they're being told, grow your reporting function into analytics. And so a lot of folks are trying to figure out, okay, what does that look like? Do you bring in a stats person, teach them HR? Do you take an HR person, teach them analytics? What have you found is the most successful formula to build a good analytics function?
Great question. So, and I wish I had the stock, this always works answer, but because we are talking about people at the end of the day, and people are different, and pretty unique. What we've seen is two tracks, and you need all the skills. So you need analytic skills, you need HR knowledge, and you need arguably a bit of IT, a bit of tech friendliness to be able to work with various software or tools, whether you're just manipulating data or trying to make charts look pretty.
Hmm.
Um, People who come from the technical side, like engineers, mathematicians, statisticians, finance people as well, who have a creative and curious, I guess, gene or mindset. So when I was, for example, when I was in accounting finance, I always felt like something was not quite right. Something was missing. I had no idea what it was, but something, you could easily say, well, okay, people are our most valuable asset, but we don't really have any tools for reporting or managing them other than as a cost to be minimized.
Right.
Which means, in my old CFO role, the answer to every question around productivity and cost was less. Less equals more. Less people and less cost equals more. Well, but really, you can't cut and still grow productivity. You can save your way to survival, but not tremendous success.
Mm-hmm.
So what you really want to be able to do is do the Moneyball thing: buy low, sell high, grow great talent at a reasonable cost, all of that. And so people coming from that side who are open to that creativity or that kind of new problem solving, because a lot of this is relatively uncharted waters, work really well. On the other side, you have the HR skill people who have an HR background but are not afraid of numbers and have a quantitative bent. So maybe IO psych backgrounds, people with maybe or a mix. Maybe they have a psychology undergrad and an economics MBA or master's degree or something. So people who have some experience in HR but are very comfortable with numbers can also gravitate to it.
Very good. So switching gears, so I mean, obviously you've got 40 or 50 people that are doing all sorts of analytics, right? They're doing the research, building out, new ways to look at it. So if you can, take like one or two things that you've been researching or published that you're going, this is kind of where this is going.
Well, the timing is great that we're having a call at this time, because about the end of this month, we're going to release a new, I would call it a new product, but that's not really the right way to phrase it. We're going to release something that we think is really exciting, a possible game changer. Now, you might say, been down this road before, but that to me, that's irrelevant, because it's something that has to happen, and it will happen eventually. It's just how many times do you charge the hill before the hill is taken?
Right.
And that is, we're going to release something we call a one-page human capital disclosure statement. So the market has been looking for, an assurance standards committee that I know you're familiar with, did some early work on in 2013, 2012, 2013, on if we were going to have, whether it's voluntary or mandatory, internal or external, or all of the above, some relatively standardized way to report on talent. And the problem has been and is today that there is nothing. There's nothing. You go to any company's financials, and it's a totally voluntary or optional thing what they say. Typically, the only piece of information that's in there for sure is how many people they have, and they don't even say exactly anymore. Now they say it's approximately, because they can't tell.
Right.
90% of companies don't even know exactly how many people they have, let alone contingent workers. So we're going to release something that the idea is to make it one page, so it's relatively easy. I didn't say super easy, but easier to do. Gives a tremendous amount of insight and really answers a lot of questions that the market is looking for. I'm not sure how familiar you are with it, but a whole series of reports have been coming out just in the last few months. It's been happening for years, but in the last few months, the NAPF, the National Association of Pension Funds in the United Kingdom, sent out a report. And the report was not a white paper telling the market, showing how to report. It was really a call to action. The cover page of the report says, where in corporate reporting is talent or human capital? And it isn't. So they're basically saying, and these are the institutional investors. These are the multi-trillion-dollar pension fund organizations like CalPERS. There's an Ontario Employee Retirement Fund and others that have all gone on record saying this is needed. And these are the people buying the stock of publicly traded companies around the world. So actually, I think that's the genesis that we have needed to make this happen. Somebody demanding it. And the essence of the whole report was, hey, HR, financial markets, corporate America, get your act together and come up with something that can help us make better decisions about how well companies are managing their talent, because it is their most valuable asset, and something needs to be disclosed about it.
Wow. So what do you think this is going to look like then? I mean, because I am familiar with Bloomberg's Sustainable Accounting Standards Board, right? We've got the GRI. To your point, there's a lot of momentum on the street wanting more insight into the human capital assets. So kind of forecast over, kind of take your crystal ball out and say, okay, when is this going to start impacting the VP of HR? When do you think, HR is going to have to actually report to analysts and say, here's why my turnover is X?
I used to not know when. I think it's just right around the corner now. In fact, it's already happening. But I would say most heads of HR, VPs of HR, haven't yet felt the waves. The waves haven't reached them, but the earthquakes, the tsunamis have happened. It's just a matter of time before the waves start to hit them. Because what's happened is, besides all these reports, and a number of them, there's a Harvard Business report that came out saying the same kind of things. I don't know if you've seen the latest Harvard magazine, HBR magazine, that came out recommending blowing up HR to start over. What's really happened is in 2014, for the first year, there's some sustainability reporting that corporations have been doing for some of them up to a decade, showing different kinds of corporate sustainability reports. Again, pretty customized, everyone kind of doing what they think needs to be done because of lack of standards. Well, in 2014, the Dow Jones Sustainability Index included a return on people human capital metric for the first time, and over 980 companies submitted including that metric. And so by the way, that's one of the metrics we're going to recommend in this standard human capital report, is what is the return on people. There's a couple of really good metrics that do that link to productivity, that are totally benchmarkable, and Wall Street and the investment world should absolutely have, as well as companies, to know how they stand. Am I really generating a good return on my people relative to others or not? And revenue and profit per FTE are definitely not good enough.
Very good. So two more questions, if you don't mind. So one, so let's say you're talking and providing counsel to a VP of HR, and they're working on analytics. So just think, Fortune 500, normal operations. They know in 3 to 5 years they're going to start being held not only accountable by their CEO, but their stuff's now HR is going to start impacting truly, the price to earnings ratio, right? I mean, there's going to be an impact. What would you recommend to an HR VP that they need to start doing now?
Well, it's a long list, but let's just hit a few of the highlights.
Right.
One would be, the time to consider. We've been considering analytics, thinking about analytics, is over. It's time to act. In fact, Deloitte's latest 2015 Human Capital Report does show that now we're finally based on their latest survey results, more than 50% of companies are actually actively acting on analytics, workforce planning, basically using big data, using the data that they have inside the organization to try to make better decisions, get not just better reporting, but ideally get predictive with their information. So in prior years, it's always been 10%, 20%, and everyone else thinking about it, knowing they were going to do it in another year or 2 years, never really getting there. So that, again, to our earlier parts of the conversation, the time has really come. They need to get it. They don't necessarily, and part of the services, they don't necessarily have to spend $1 million a year on a big analytics team. You can do that, but it can take years, because if you go hire a bunch of statisticians, they have to learn HR. This is not something that you can just put a statistician in front of the data, because I've tried it and it doesn't work. That you can just try it and they'll figure everything out. Because this is such unstructured data and the relationships are harder to see, because again, people are so complex, statisticians by themselves, even a mathematician, probably won't figure it out. But somebody with an HR background who's good with numbers can probably see it and figure it out really good. Like a geologist for an oil and gas company. Yes, we could go set up an oil rig in Texas or someplace in Alaska and start drilling. Eventually, we'll hit oil. But is that the first time we sink a well, or the 100th time we sink a well? Whereas a geologist can study the soil, maybe do some sonar testing and tell you, yep, there's a 70% chance you're going to strike oil on your first try. And if not, we'll definitely get it for you on your second try. And so HR people who are good with numbers are generally the ones who kind of know where to dig. They know where the problems are in the organization, or are likely to be. So from an advice to an HR leadership, is try to find people who know HR and know numbers, or you can bring in the numbers people, and it'll take arguably a bit longer to get there. And one comment I would say, software is only, it's a tool, right? Whether you want to call it a hammer or a truck that you use to do analytics, it's not the panacea, it's not the absolute solution. I see too many organizations jump into software, and then software doesn't do everything because no software does everything. And then they end up, throwing it out or not using it, which is very expensive learning.
Very good. So, and then last question. So, I also have the privilege of, helping folks learn HR. So brand new HR practitioners think, somebody that's either in college or, right out of college getting into the HR field, right? So, they're trying to figure out everything from comp and ben to ER to, L&D and analytics. So for a brand new person starting their HR career, what advice would you give them?
Well, that there's an exciting new subspecialty in HR, which is analytics and workforce planning. And more companies are creating that as a specific role or specific department. So if you like numbers and you like puzzles or solving complex, challenging questions that involve people, then it's really an exciting place to get into because it's still relatively open. Lots of companies are still trying to figure it out, trying to clean up their data. So if you're interested in that sort of thing, there's some amazing opportunities in HR. So if you're a recent HR professional, definitely something to consider. People who go into compensation or go into performance management, talent management, some of these areas can translate into it a little bit more easily than others. But the other thing for anyone who's been in HR for a little while, if you're in recruiting or you're in the learning space, analytics is both an offense and defense. It helps you figure out how to make better decisions and where to allocate scarce resources. Mm-hmm. But it also is a defense to help defend your budget or potentially show the ROI or the impact of doing what you do well. And so one of the things, again, I knew the first place when I was in finance to go to cut budgets. I'd go to learning and I'd say, wow, look at that big learning budget. What's the ROI on that? And the head of learning would say, oh, well, it drives retention, engagement. It's invaluable. And then, yeah, but I'm a numbers person. Put a number to it. So, well, turnover is incredibly expensive and, engagement is hugely valuable. Say, okay, I agree with all that. How much is it worth? Well, at the end of the conversation, they really couldn't give me a number. So I'd say, well, we all agree that training is good. You have a lot of training. I'll take 10%, please. And hence, their budget is cut. Why? Because they can't justify to show any kind of an ROI on that. If they could, in some programs, not all, the ROI is so huge that not only should it not be cut, it should be added to. It should be expanded. In many cases, the ROI of some training program can be 300%, 1,000%, 2,000%. And so if you've got something like that and you can show it with numbers, and by the way, we just completed a project for a major government agency in the US, and they asked us to show ROI of training. So when we started, I rolled my eyes. I said, ROI of training in the government? Are you kidding? But you know what? They found ROI of training in the government and in some common leadership training that they conduct to the tune of well over $1 million a year for a limited program. So they've got an awesome business case to now potentially expand that training program.
Fantastic. Well, I really appreciate your time, and I want to be really respectful because I know you're doing a lot of things. Is there anything that I haven't asked about that you'd want to share with anybody?
Just that it's an exciting time, and with an improving economy. Although I don't know if it's rapidly improving, gradually improving. Economy. It's a great time to be getting into a new space around analytics. And if organizations are still trying to figure it out, one of the things I would advise them to do is join some sort of a group, because there are lots of other organizations that are trying to figure it out and take some sort of action. Or send some people, get some training. So try to get your people upskilled as quickly as possible if you want to dive into it. Again, it's not about how much money you throw at something. It's about how effectively, and can you have a consistent, dedicated effort to analytics in your organization. If so, you should eventually, sooner or later, get some great results.
Very good. Well, thank you very, very much. And give me just 1 second and I'll turn off the recording here.